Aussie pensioners, get ready, because a big change is landing in just a few weeks, and it could directly affect the money in your bank account every fortnight. If you or someone you love receives the age pension in Australia, this could mean an extra $36.80 in your pocket starting September 20th. Sounds great, right? But here's the twist nobody talks about enough. At the same time your pension goes up, the deeming rates that decide how much of your savings count as income are also rising, and that could quietly eat into the very increase you're expecting. So if you've got money in a savings account, term deposits, shares, or super outside the family home, pay close attention, because this update isn't as simple as just a bigger number landing in your account. This is about real dollars and real decisions you may need to make before September 20th. So stay with me until the end, because this could change how you plan your finances this year. Welcome back to Aussie Benefit, the channel where we break down every Centrelink and age pension update, so you don't have to wade through confusing paperwork to understand your money. If this is your first time here, hit that subscribe button right now, because we post these breakdowns the moment new figures are confirmed. And if you find this useful, smash that like button. It genuinely helps this channel reach more pensioners who need this information. Now let's get into what's happening. The government reviews pension payments twice a year, in March and September, based on cost of living and wage movements across the country. This September, the numbers are looking strong, and it's shaping up to be one of the more noticeable increases in recent years. For single pensioners, the maximum fortnightly rate is expected to climb by around $36.80, pushing the total to roughly $1,237.70 per fortnight. Couples aren't left out either, with combined payments expected to rise by about $55.60, bringing their fortnightly total closer to $1,866. That's a meaningful jump, and for households relying on this as their main income, every extra dollar matters when it comes to groceries, electricity, rent, fuel, and everyday costs that keep climbing no matter what. Now here's where things get more complicated, and this is the part one really want you to focus on. Alongside these payment increases, deeming rates have also been adjusted, and this matters more than people realize when they first hear the good news. Deeming rates are used by Centrelink to estimate how much income your financial assets are generating, regardless of what they're actually earning in real life. So even if your savings account only pays a small amount of interest, Centrelink still assumes you're earning a certain percentage, and that assumed income counts toward your income test, which directly affects how much pension you receive each fortnight. For a long time, these rates were frozen to protect pensioners during economic uncertainty, but that freeze has ended, and rates have started moving upward again. The lower deeming rate now sits around 1.25%, while the upper rate has climbed to around 3.25%, applying once your financial assets pass a certain threshold. In practical terms, if you hold significant savings, shares, managed funds, or account-based pensions outside your family home, Centrelink may now assume you're earning more income than before, which could reduce the pension you're entitled to under the income test. So while your base rate is technically going up because of indexation, some pensioners with larger asset holdings might find the rising deeming rates partially cancel out that increase, or in some cases reduce their payment more than they expected. This is exactly why it's important to look at both sides of this update, instead of just celebrating the headline figure without checking what's underneath it. If you have investments outside super, decent savings in the bank, or a mix of shares and term deposits, now is the time to sit down and actually work out how these two changes together affect your total fortnightly payment, because the final numbers can shift more than people expect. It's also worth remembering that asset test thresholds are usually reviewed separately around mid-year. So if your circumstances have changed recently, whether from selling property, an inheritance, or adjusting your super drawdown, it's worth checking directly with Centrelink or a qualified financial advisor to make sure your assessment stays accurate. Services Australia and the Department of Social Services typically confirm the final official figures shortly before September 20th, based on the latest Consumer Price Index data released by the Australian Bureau of Statistics. So keep an eye out for that official confirmation, since early estimates can shift slightly once the final numbers are locked in. So here's what you really need to walk away with today. From September 20th, single pensioners are looking at an increase of around $36.80 per fortnight, and couples combined are set to receive close to $55.60 more, genuinely one of the stronger increases we've seen in recent years. But please don't just focus on that headline number in isolation. With deeming rates continuing to rise after years of being frozen, anyone holding financial assets beyond the family home needs to carefully check how this affects their overall income test result, because the real increase landing in your pocket might look quite different from the number everyone's talking about online. My honest advice, as always, is to log into your MyGov account once the new rates go live. Review your Centrelink statement carefully, and if anything looks confusing or seems off, don't hesitate to contact Centrelink directly or speak with a financial counselor who understands retirement planning. These small details genuinely matter, especially when so many people are relying on this income to cover essential living costs in a climate where everything just keeps getting more expensive. If this video helped clear things up for you even a little, please hit that like button. It truly does help this content reach more people who need it. And if you haven't already, make sure you subscribe to Aussie Benefit so you're among the first to know the moment official rates are confirmed and whenever new Centrelink or age pension changes are announced. Drop a comment below and let me know how this update affects your own situation. I read every single one and try to reply whenever I can. Thanks so much for watching. Take care of yourselves, and I'll see you in the next video.